Well, we think that in the second half of this year, assuming that the fiscal stimulus package gets passed and the COVID vaccine rolls out in a successful manner, then we think that the Fed will likely have to maybe start thinking about tapering maybe next year, but they're going to have to start talking about it because they'll be asked about it. And how they manage this communication will be very important given what happened last time. Recall in 2013 when there was taper tantrum that really caused quite a bit of volatility in the financial markets back then. So how they manage this communication is going to be quite tricky.
And would that mean that what we're seeing in the markets right now could be the phase of the last hurrah?
Well, we think that even though we might be talking about tapering for maybe next year, policy rates will stay at zero probably through to 2023. And right now, when we look at the credit markets, high yield has retraced almost all of the spread that they lost in March last year. So they're pretty much back to pre-COVID levels. However, there are still some pockets of opportunity within high yield, particularly in those industries that were affected by COVID, which in turn now will benefit from a vaccine rollout. So in those parts of the market, yield spreads are still about 150 basis points above their pre-COVID levels. And then there are also other parts of the credit markets that are less traditional that you can still earn pretty decent income. For example, there are these mortgage-backed securities called CRTs in America that offer credit risk to the U.S. housing market, which right now is in a very strong place. Year-on-year prices across the U.S. housing market last year was about 8%, and sales volume are much higher seasonally than last year. So we think that there are other pockets of opportunity outside of high yield to earn a decent level of income.